There we go. Thank you. So we're very delighted to have the team from Ardius here to share with us on a bit about how it works from the US perspective. So for those of you who have entities located in the US or are looking to open up entities in the US, then it will hopefully give you a bit of better context of how things work over there. Quick intros. My name is Helena Patience. Hello and welcome. I'm CPA CNA based here in beautiful Vancouver, British Columbia. It is not snowing on us today. Nice sunny day, which is very unusual in February. I'm the CEO for Entreflow Consulting Group. We're a consulting firm based in Vancouver and also have clients all around the world, actually, specializing in high growth companies from a CFO and finance perspective, and also on the HR side. And I'm going to pass it over to Janice to give us an intro for herself.
Hi, I'm Janice Orlando. I'm a partner with Ardius, and we are here to democratize and just flow out free money, we love to say, with Ardius. My background is in scaling businesses and some investing and just lots of fun sales and operations. And so we're really very excited to be in this space. Sounds like it's very similar to what Entreflow's all about in terms of creating tool belts for entrepreneurs. So we're very happy to be here. And on the team, just to say right now, we have our founder, Joshua Lees, in the room. And so is Rochelle Drost, who's our success coordinator. And so we're anxious to get started here in a minute. Thank you.
Thank you. Okay, just a quick details about what we do at Entreflow. So like I mentioned, we do accounting services, so CFO, bookkeeping, and tax on the Canadian side. Also from an HR perspective, we do HR management. We're a licensed recruitment agency too, so we help lots of high growth companies scale their teams as well as their business, which is always a fun thing to do. And then we're very tech forward, so lots of system implementation, software implementation to help businesses automate as much as they can and really focus on growing the business and less on the day-to-day admin fun. So if you have any questions about what we do, please feel free to reach out to us. And as well, there'll be some contact details for the Ardius team afterwards too. So if you have any follow-on questions, please reach out to them. I'll pass it over to Janice to talk a little bit about what Ardius does.
Right. Well, I'm very happy to again be here. And we also are very tech forward. We've found, I'll explain a lot about the tax credit here in a little bit in more detail. So I won't even bore you with all of this piece, but we were founded just a few years ago, have some awesome developers, built out a great way to automate this amazing opportunity. So I'll defer all the details to our slides. So I thank you so much, Helena. This is great.
Perfect. And this is today's webinar is one in a series of our Secret Weapon business chats. So we actually started doing webinars, early on when the pandemic started, as a means to, get information out to our clients and other members in the community to really arm them with some information to help them weather the storm and really grow their business through this interesting time. So we have a number of other webinars coming up. We're adding new webinars to our listing, our website regularly too. So feel free to check out the website there. I'll go to entreflow.com and there's a link to our Secret Weapon business chats where you can find other webinars we'll be doing over the coming months. So please check that out. And as always, participation makes it way more exciting for us as panelists and for the rest of you here too. So like all of our webinars, please feel free to ask questions as we go along. I'll be monitoring the chat section and the Q&A section here. So if anything pops up for you, any questions, comments as well, feel free to share those and we'll get to those as much as we can as we go. And as well, if you can send them in the chat or the Q&A, or if you maybe at the end, if we've got a Q&A session or we've got some time left over, then we can turn on your mic and you can ask verbally as well. So like I said, feel free to ask questions and make this as dynamic as possible. And we'll have our contact details at the end too. So if there's anything that we haven't got to or anything that comes up for you later, then you have our contact details to follow up with us. And I'm going to pass it over to Janice now. Thank you so much.
Okay, great. So I just need to move into sharing the screen now myself, correct?
Yes.
From where we started. for the screen number. Okay. Perfect. Let's see here. This is not it. Sorry. Let's see where. Is this it?
Yeah, we're just seeing a blank screen, so not quite yet.
Ah,
There we go. Okay, and then just into presentation mode and we're good to go.
all right, perfect. Let's see, slideshow. Nope, that's not the one we want, is it? We want the.
Just click the play from current slide. There we go.
Perfect.
Yeah, perfect.
All right, great. Oh, good. Okay, welcome everybody. So what is an R&D tax credit? So many of you are from Canada, so it may look a little different in that world. We're dealing specifically with the R&D tax credit that's in the United States and from our federal government. We also do state credits, so we'll talk a little bit more about that later, but we also have 37 states that actually offer tax credits that sometimes mirror or are very close to the federal credit. So that's pretty exciting. So it's a dollar for dollar, non-dilutive cash incentive, and it's for companies that innovate. And so they're pretty aggressively, they've set aside a lot of money. And in our world, it's about $50 billion. It's an annual number, so it's very large. Right now, to the best of our understanding, only about 13 billion of it is ever claimed annually. And so there's a huge opportunity for companies that want to scale and are actually capturing innovation in their processes and in their, whatever business model they're in. So we're very excited to share this as an opportunity because it's just not known very, very well. So there's a lot of unclaimed money that's available. So that's very fun. I won't bore you with a lot of tax history, but I do want to tell you a little bit because this credit has been around for a long time, about 30 years. And what's interesting about that is that for the first like 25 years, 20 years, over 20 years, 90% of the credits were claimed by companies that had over 100 million in revenue. So it was really not democratized. It wasn't flown down to the medium, small businesses who really are spending a lot of their heart and soul in creating innovation and doing very cool new products. So somewhere along the line, they figured out that they needed to do something else. So in 2015, actually about 2014, they started revising the compliance so that it would actually accommodate the early stage companies better. And I think I introduced Joshua earlier, and he was actually in at that point during a lot of those years, 13 of those years, he was actually running the West Coast division for Ernst & Young and was handling R&D tax credits for the West Coast. And so he was actually collaborating with the government in creating this new model that happened in the PATH Act in 2015. So we're really fortunate because we've designed our rollout in such a way that's very compliant with how the government likes this to roll with the early stage companies. So, so that's how the PATH Act is, without boring you a lot more with the details on that. And so the PATH Act, what does it do? So backing up just a little, the original product and credit was designed for companies just to offset, not just, it's a big privilege because it still is available that way for companies that have profit. It can offset profit and tax liability dollar for dollar. So at the end of the year, if somebody owes the government money, they can offset with tax credits that we've found on a dollar for dollar basis, that specific tax liability. So as we all know, small to medium businesses don't always have profit, and they're all, spending money like crazy or reinvesting in their business. And, that's very normal. So what the small businesses can do is actually utilize tax credits to offset payroll taxes. So every month or quarter, depending on what payroll provider a small company has, they can offset their credits. So compliance, they have actually a definition for a startup, and it's 5 years with no gross receipts, 5 years prior. And then as the company, that's the first year they can claim the credits after they have their gross receipts, and then rolling forward. Oh, we have a typo in here. Sorry about that. Gross receipts of less than 5 million in the claimed year. So when you hit that number, then you move out of the startup category. And actually, prior to that, there is a uh, a really cool feature in this, in that you can go back. Like at this point, if you have 3 years of previous gross receipts, but you still weren't in a profit position, we actually can um, claim past credits. They'll roll forward with you, and if you're not utilizing them all in W-2 taxes, if you don't have payroll taxes to offset, you can actually offset and roll them forward. So even if you don't utilize them all in the next year or the coming quarters, you can actually then roll them forward, and they become an asset on your balance sheet. So they don't go away. They can roll them forward like 20 years. And then when you convert and you actually start paying taxes and your company becomes more profitable, then you can start using those same credits to offset tax liabilities as you scale. So it's a very became very more affordable and user friendly for the smaller businesses and medium-sized businesses. So that's what that looks like. And this is a more detail of that same thing: pre-revenue or less than 5 million in a claim year. And it can maximize up to 1,250,000 over the 5 years. So it's a maximum of 250,000 a year. And so what's pretty interesting, we're talking to a lot of companies right now, is that if you were to file your taxes, assuming you're a US company, and you file your taxes by the end of March in Q1, you could actually start offsetting payroll taxes in Q2. So that's kind of a motivation to move forward if you think you're in that position, and we can figure all that out. But in any case, even if you did your taxes in April 15th, you could start in Q3 to offsetting payroll taxes if you qualified there. So that's the really good news about that. And then profitable companies can claim unlimited amounts of monies. We have companies that are, Joshua back with Ernst & Young, we're dealing with really large companies and millions of dollars, they were offsetting with innovation and R&D credits. So that's the really good news about it. And so with the federal government, we can go back up to 3 years, and the states, we can go back 4 years, previous years, and actually work with your CPA or whoever your tax preparer is, and capture those credits and move them forward and roll them forward. So that's the really good news about that piece. And so why is this like such a mystery, right? Why is it a problem? So why is it so obscure? Well, the big picture is that most people are not aware of it. And it's because it's very nuanced. It's IRS driven. It's a government document. So, and the calculation's pretty intense. And so even people who are aware just don't know how to capture the credits. So that kind of moves into the mid-level firms, and it's very complex. It's very time consuming. So like I mentioned earlier, for those 30 years, actually up until recently, the big four, which in our world, tax firms, were the ones that were charging a lot of money to do the study because it's very labor intensive. They'd start out and it'd be a $50,000 bill just to do the study, because people would sit in conference rooms for very long periods of time and actually connect with all the people in the firm and start asking a lot of questions. And Joshua can speak to that in detail because it was pretty intense, and really eliminated out the early stage companies as a viable option. So from there, the answer is very much like you have with the Entreflow group, is that we saw the problem with software and automation, become very tech forward. And so what we started doing was building out the internal automation, right? Internally. So we do cross marketing. We're very connected with a lot of firms, so that there's a lot of momentum in the early stage companies to actually utilize this credit. The data science that is being developed around this internally is very cool, and makes the process a lot more efficient and accessible to a lot of companies. So we like to pride ourselves in being a company that optimizes. A lot of companies don't have the expertise because of Joshua and we have several team members. We have about 70 years of big tax for experience, and so our process is very geared. Oops, sorry about that. Geared toward. I have to go back to. Oops, there we go. Sorry. Um, Maximizing and optimizing the credit itself. And then along with that, we have fees. I can talk to them more about that later, that are transparent. They're very user friendly. They're no risk because we don't charge until the company actually utilizes their credits that we find. And so that's a big piece. So that's why we really do claim and feel confident that we're democratizing a very cool product for early stage companies. So do you qualify? So the big question is, how do you know that you actually qualify R&D tax credits? Historically, it's been viewed as a very, white coat laboratory kind of thought process, but that's really not true because technology now, and I think especially in the last year or two, most companies use technology on some basis, almost all. And so whether or not it's their product or processes. So these are the four, the government has, and I'll talk a little bit more on this. The next slide is the 4-part process that the IRS rolls out. But these are the basic questions you would ask yourself in terms of your company, whether you might qualify or not. And so one is, do you develop newer, improved processes or products? Are you doing something that's really cool? Are you improving? Are you doing new? So it's either product or processes. It can be a tech rollout. It can be a product. It can be all kinds of, there's many opportunities in pretty much every area that we come in contact with. Do you reduce uncertainty through innovation? So are you testing? Are you making decisions about, or is it uncertain? Because if it's something that's easy and you know the answer, then it's really not R&D. Do you use hard science like engineering, biological, computer science, which pretty much everybody does now? So hard science is the technology. And do you test multiple variables? Is it something that you're doing A/B testing? Are you running different variables? Are you looking at multiple options as solutions? Are you solution based? Are you always looking at what that could look like? So I'm gonna get rid of this guy here. Okay, so there you go. Those are the basic questions. And if you say yes, I think so on those, then chances are you do qualify. And there's the 4-part test. So IRS compliance. This is an extension of that. Product and process design. Are you extending and creating different capabilities and methodologies? Do you use tech? And do you experiment? So this would look like even cost overruns. Are you you're modeling for your pricing? If it's a fixed price as opposed to a contingency pricing, that would flow into your experimentation conversation. And then the permitted purpose is function, performance, reliability, and quality. So are you relating your product and what you're doing, your activities internally, that are solving these problems: function, performance, reliability, or quality? So that's a little more definition on that. So what are qualified R&D expenses? So there's actually 2 tiers of what expenses look like that can qualify for the R&D. The first one is the wages. And what that looks like specifically is just a percentage of the time spent for US employees in the R&D process, which were the 4 parts that we just looked at. So an interesting piece of that is that there's a wage qualification tiered. So let's say a CEO does a lot of R&D. He's very innovative, but he's driving a team, right, that's doing experimentation, or they're building prototypes, or they're involved with all different kinds of product. And he's directly supervising them. So even the time that he's not doing the direct R&D, but he's supervising, can qualify. And then, of course, the person performing it would qualify, whatever percentage of time they're doing that. And then the person, even like admins, directly supporting. So say they're doing analytics, they're gathering data, they're even putting data into software. So directly supporting the R&D process also has a percentage that can qualify. So those are the pieces that we look at while we're uploading the data, and then we verify that as time goes on with the company to make sure that we're accurate on percentages. But it's wages are the first area we look at, and these are W-2, by the way. So then the other part are expenses. So you have your wages and then you have expenses. So a lot of companies, as we all know, don't have employees to begin with. They have 1099 consultants. And so in that case, that actually also qualifies also. There's a percentage that rolls into that as a qualification. And so examples of expenses, and this would be like your QuickBooks, we'd upload that. We know what kinds of things to look for that qualify. And our system is intelligent that way. So things like prototypes, supplies, and then consultants. And if they need to be US based, again, actually to qualify, a lot of people are going offshore with some of their consulting work. But to the degree they're onshore, that those numbers apply. So we ask those questions, make sure we know where people are located. And so there's a lot of layers to that, and there's a lot of nuances. So we like to think that we're pretty smart. Our intelligence on our tech is really drives a better result because we know the kinds of things to look for. We might ask questions about GL codes because people put things in strange places sometimes when they set up their books. You guys probably see that a lot, Helena. And we do too. And it's like when you don't know, you don't know. So one of the really cool things that I've seen over time, over tons and tons of companies, is that once they go through this process the first year, then they go, oh, okay, that makes sense. We hid this particular product or process in, we called it something random, and we can now make it more visible and make sure it comes to the surface as an R&D product. Does that make sense? Do you want to say something, Helen?
Just one question. We had a question in from Shan who asked if is there a limit on how much we can claim as R&D credit?
If you're a startup, is he paying taxes currently? Is he in a profit position?
I guess, Shan, if you can share with us a bit more. Well, maybe if it is or if it isn't, maybe we could have both options.
If you are in a profit position, there's no limit, none.
Okay.
And if you are not, there's a limit to how long you can actually use it to offset payroll taxes, but there's no limit to how long you can collect the credits to roll forward with the company, so that when you do become profitable, you have that credit to offset tax liability.
Okay, perfect.
And then, as a note, because we deal with a lot of startups, somewhere in that phase, maybe in the first 3 to 5 years, you might get acquired or you merge or whatever. So those credits become an asset on your balance sheet. So even if you think you're not going to use them all, it's probably a good idea to get them on your balance sheet as an asset, because you might get a multiple for them, right? I mean, that happens very often in our experience.
Very cool.
Yeah.
And then as far as the my question actually with regards to your employee, and you mentioned a portion of your management team, depending on what they're actually doing from a supervisorial perspective over the rest of the team. Does the IRS need to see, say, like time tracking, time entries? Like what kind of proof do they want to have for the time spent there?
Yeah, Joshua, I'm going to turn that to you because you're much more in tune with that level of technology and what we're looking for. I know it depends on the company. Can you share with us more detail on that, please?
Yeah, no, it's a great question. It's definitely not binary. So it can be a percentage thereof, right? So a lot of other variables actually play into a part. Would be the size of the company, how flat the organization is. So if you're a startup of 2-3 people and you have executives, doing hands-on work, that's not too far-fetched. But with a company maybe like 20-30 people, time tracking is one of 3 ways you can substantiate the time. So project tracking is great. The IRS loves that, but it sometimes doesn't maximize the credit, and that's why they love it, right? So we found that with project tracking systems, one, they're not devoutly being used. So inconsistently, some employees will use it, right? And then other employees do not. And even when they do use it, we find that the definition of R&D is very different from how the project tracking systems are actually tracking. So they may call something like bug fixes or maintenance, but in the meantime, there's still components of uncertainty, areas of process of experimentation. And so even those things have to be redefined within the project tracking systems themselves. They can be reclassified, they can be mislabeled. And so we need to all we need to do is show the IRS or the government, what changes or definitional things we're earmarking. The other way we can do it is, again, based on different types of quantifications. 100% permissible is surveys, right? Surveying people closest to the facts, internal documentation that are just generally created from presentation, meeting minutes, things of that sort. And we like to do a hybrid. Our systems are set up where it's great if we can do some sort of quantification, like in an interview, but then use something like a project tracking system to prorate, right, those percentages. So sometimes it's a combination of both. And then the third way is like I was mentioning, just the supplemental documentation that we find, right? It could be, for example, in a software company, it's like a system like GitHub or Jira, right, that they can tap into, and we can look into the lines of code that are being written, the number of epics or changes or commits, and we can provide our own application, right, of quantification on those systems that are not actually project tracking, but we can actually find a way to numerically come up with percentages that are auditable and automate that process.
Okay,
so that's
cool.
a great question. Yeah,
that's very clear. Thank you for that.
Yeah.
And thank you for your question too, Shan. If anybody has any other questions along the way, again, please ask them in the chat.
Yep, great. Okay, so what is our advantage? So this is really simple. We just are tech forward. We've talked about that a lot. Automating, simplifying, just rolling out a way of uploading, creating data. So we call this the data dive. We just upload data. I'll try to describe to you what we need here in a minute also, because that's always everybody's question. What do you need from us to even know if this would qualify? And then we do the calculation, and then we create the report. So it's pretty straightforward. So the data dive piece, everybody is like, what do I need to give you? Well, to begin with, so there's two parts. I like to describe the two parts to the actual code that what the IRS requires. One is the quantitative analysis, which is where we derive the number. It's actually what is the actual number that you might qualify for. And then the second one we'll talk to about in a minute is the qualitative. But the quantitative part is where we upload, we actually onboard all kinds of data from you, but it's very simple on your end because it's your payroll records, it's your expense reports, it's your previous tax returns, and then it's an org chart. And so those things are usually very simple for people. And we have API connections with a lot of people out there. And even the ones we can't, we would get access and we download the data by way of permission from you. And it makes it really simple. It goes into our system. We actually create a quantitative result, and then we test it. Then we look for questions, things that we may not know, and that's when we would go back to you and just do a verification if we had questions on what it is. But usually it's very straightforward and pretty easy, and especially with smaller, medium-sized businesses because they don't have the complexities. Some companies, if you're larger, capturing the credit would look like actually maybe multiple projects. So we have the capability of doing that and then rolling out the appropriate credits that relate to the activities in the different projects. So we have the ability to do that, which is a whole different layer of technology. So then the compliance report. This is another piece that actually at the end of the day is the IRS requires a defensible report that you maintain with the quantitative that actually substantiates and says we have validated that your activities actually are innovative and are compliant with the R&D process. So examples of that, everybody goes, well, what do you need to do that? Well, we know a lot by the business that you're in. By the time we get the first part of the data, we know what you're doing. We pretty much know, we have a pretty good idea what you're doing. And then we verify it and we get supporting documents. And so you would just upload these later as, as a next step. And these would include like pitch decks, articles, maybe IP, if you're getting patent approvals, because parts of that are the attorney fees on that can be offset and applied toward credits. The applications themselves, see, would be substantiation, published articles, like we said, epics, the Jira, GitHubs, any of these pieces that analytics, if you're, creating analytics with, we always get questions with companies that are actually using other people's software. And so if you're just using the software, that part probably doesn't apply because you haven't created it or you're not modifying it and making it better. But then we also find a lot of companies that use other people's software, but then create their own analytics. They have a whole nother layer of technology that uses other people's software. So that layer might qualify. So we can make sure we ask all the right questions with what you're doing, and product designs, your any sort of testing, like if you're doing lots of prototypes, and you test prototypes, then you do A/B testing. So all those kinds of things all apply in terms of labor, and then supplies, all the supplies that relate to that as well. So
okay. Sorry, Janice, I had a couple more questions to come through. So if I can interrupt you briefly here. So I do integrate with paychecks as well as ADP as another alternative. So
yep. Yeah,
okay.
no problem.
And I'm sure, is there somewhere on your website that shows all the integrations that you've got in place, or is that?
Yeah, and even if we don't have a specific API, we are very proficient at accessing the data. So if anybody on the planet that you're doing business with, we have a way of working with you to download it. And sometimes, believe it or not, and I'm sure you would believe it, people are still using Excel spreadsheets. Early stage companies, they're like, I'm just getting by and using Excel, and that's my expense report. So even in that case, we can work with you.
Perfect. And then we did have a couple of questions come through. One from Gary: what percentage of your clients' R&D tax credit claims are reviewed by the IRS, and does the IRS perform desk and/or field reviews? Please describe what a typical IRS review, i.e. documentation requirements, challenges during the reviews, for example.
Okay, Joshua, I'm going to put you on the spot on this one. You have the years of experience.
Yeah, again, typically, maybe I can answer it in two ways: the pre-pandemic answer and then the post-pandemic answer. Yes. So the pre-pandemic, you were generally small to medium-sized companies were somewhere between 20 and 30% as well was an average, and that could be anything from a desk audit, just a standard. Here's the first 5-10 questions, and if you can answer them, then you've at least crossed your T's and dotted your I's. A percentage of those companies would then go into a full-blown, field audit, which was oftentimes associated with a much larger audit. So that could be, maybe you have sales tax nexus issues, you have other types of, revenue audit. It's a much bigger part of an audit. And so that could also be another, I would say 10-15% of those companies going into that. Post-pandemic, it's been a lot less, obviously, because they themselves are also social distancing, not going on site as much, and also they're also implementing things like, for us, we have the Paycheck Protection Program, which is known as the PPP, which is also almost like a grant from the government to help small businesses actually stay afloat, right? So their job is not necessarily to try to audit and take away money at the moment. It's more to highlight and try to actually get the money into the hands of companies that actually need it and really need it. There are still those desk audits that are ongoing. We still are seeing them, but again, they are typically coming from the Audit Technique Guide, which we helped craft back in wow, it's almost been 20 years ago, but but they're still going through that. And it's about 100 questions that they pull from, anything from, show us your documentation. How did you quantify this? What is the substantiation for that? And generally our software takes care of about, 95 to 99% of those questions. So it's always there. It's already ready. And if you're going to ask me what that 1% is, like, we're happy to chat, but we agree to disagree on one or two couple things with the IRS, and that's too atypical, right? So, but generally that the percentages has been a lot lower post pandemic, but they are from our counterparts at the IRS. They are, gearing up. They are getting they see improvements, right? And so they're going to start ramping up as well in the latter part of the year, I would say.
Yeah, I think we have a similar thing happening in Canada as well. A couple more questions here. Thank you very much for that, Joshua.
Sure.
Sri says, we're in the software product business. We've been building since 3 years. We do not have any revenue yet. How do you claim R&D credits without revenue? And also, are we eligible for PPP? We have most employees on 1099. And just added that they're a C Corp. We claim patent expenses into our, another question, can we claim patent expenses into our personal tax returns?
Yeah, that's a great question. Can I take that, Janice?
Yes, please.
Yeah. So there was 4 questions. So Helena, if I missed one, please let me know. But the first question I heard was certain types of costs. Like I heard, patent costs. There are legal type costs that qualify here in the US. It's related to patent perfection and patent prosecution costs, we call it. So if we are looking at legal costs to help our designs, right, that impacts our designs by changing that design so that it becomes more patentable, right, that can qualify. If we're changing our designs and modifying our designs so that we're not infringing, right, on other patents out there, that can also qualify. So another great example on the outskirts, right, directly supporting is something like technical marketing is another good example. If you're going, well, we used to have trade shows, but when trade shows existed, right, you're going out there meeting with your customers, right, and saying, hey, here's my version 1.0, looks great. Can you do this or can it do that, right? And all of a sudden you start making changes based on the customer's feedback, right, or end users' feedback, right? Those type of relaying of information from those technical marketers, maybe who have very technical backgrounds, right, to your project team, right? Often those supporting costs, we call it, can qualify. And then the PPP, it with the 1099, absolutely. In the earlier PPP, the first one, they were solely focused on your W-2, right, and sustaining your payroll, levels and your headcounts. With the second one that we're finding currently, and I'm assuming the question is related to the second one currently today, you just have to show an impact, that the pandemic impacted your revenues. And so that revenue can be looked at in several different ways. Either one, from an annualized basis, obviously you can show, hey, from 2019 to 2020, we had a significant drop. Or that drop, I've actually found very successfully, can be shown during the months of the pandemic. So overall, there may be opportunities where, hey, we did break even, or we did even slightly come out ahead, but we had to pivot and we were impacted because if you look at, May, June, and July, right, those 3 months we had no revenue, right, and we were significantly impacted. We could have had an even greater year, right, to that. So there's a lot of
there.
A lot of narrative that can be drafted and shown, right, to help you qualify for the PPP. And then now you're gonna have to help me with the first question. I know there was one about
for sure. I guess just
if you're not profitable, right?
And just to clarify on the claim patent expenses, the question was, so their company is a C Corp, so can they claim the patent expenses on their personal tax returns?
None of it's a C Corp. So
so it should go on their business, yeah.
Yeah, well, if again, depending on the entity and the activity in which it takes place. So if they're an individual and they want to do it on their individual returns, they can. But assuming that the activity, the patents are in the C Corp, which is why they listed the C Corp, or alluded to the C Corp, then it would obviously fall into the entity which they're claiming. Now, if they're an S Corp or they're a 1065, meaning sole proprietor, then obviously they can themselves claim those costs as well.
Okay.
Yeah, hopefully that makes sense.
Great. And then that to the first question then was, so they don't have any revenue yet. How do they claim R&D credits without the revenue? And I think, Janice, you spoke to that a little bit at the start of the presentation. So if you could give a quick high level of that piece of the content again.
Yeah, that's part of the qualification of being a startup, that you may or may not have revenue. So what the revenue does is actually start this time that the 5 years of you being a startup. So let's assume 3 of the 5 years, and this applies a lot to like our biotech companies. They may be in business 10 years without revenue, a lot of research and development for a long period of time. So as long the year that you have your first revenue is when you start the 5-year clock. So you can technically be a startup for 10 years. Correct me if I'm wrong, Joshua, that's my understanding, for a long period of time until you have the revenue, and then it starts the clock on the 5 years. And so during that time, you're capturing your expenses.
Yeah, and I think to Helena's question, how then do you monetize those credits, right? So if you can't use it against liabilities, then you can use it against your payroll and payroll taxes. So imagine a company. We had one. We were investors in a company that had 12 employees. They were making about 90,000 each, and we were pre-revenue, so no revenue at all, and our credit was roughly about 175,000, and we use that to offset our payroll taxes. Now, I say payroll/payroll taxes. There are some payroll providers that will allow you to use these credits against actual payroll. I mean, they're just fronting the money themselves. And then the way the logistics works around how that gets refunded is you basically are making your normal payments to your payroll provider, and then at the end of the quarter, it's basically stated as an overpayment because you have an R&D credit.
Got it.
And then they refund it to you at the end of the quarter. But again, with certain partners of ours, the Gustos of the world, the Ripplings, like we're not, endorsing any one provider over another, but there are certain ones that we've been working on with them that we've written the backend for, that you can now do a real-time offset. So if you're not interested in waiting for like the entire quarter, because cash in hand is better today than tomorrow, there are companies that we've worked with that will allow you to do a real-time offset. So they'll say, hey, on this current paycheck, don't even worry about submitting the payroll tax amount because we know you have an Ardius R&D credit, at the end of the quarter. So that's oftentimes helpful if the amounts are material enough. We've seen companies who are like, oh, we'd love to do the real-time offset with you guys and get the money in our hand and not have to wait for that check right at the end of the quarter.
That's very cool. So are the Gustos and Ripplings of the world actually remitting and then getting the remittance back on your behalf? So they're managing the cash flow to your benefit, or is nothing actually going to the IRS and coming back from the IRS in that instance? You've got kind of like a pre-qualified.
It's both. So it's a great question because it depends on the PEO and the payroll provider themselves if they're certified by the government. So if they're certified, then they can claim the credit on your behalf, and then they can front you the money. If not, then it's basically a mechanical, we call it just mathematical gymnastics, right? So if you're not remitting it now, they just have the go ahead from the government. Hey, we would have remitted this to you and you would have had to refund it, but they gotten authorized to say, okay, we're just not going to remit it, period. So they've actually gone ahead. Yeah, I've done the paperwork ahead of time because they have enough volume where it makes sense for the IRS to say, oh, you know what, because of volume, we can approve you guys to not remit, right? And there are some companies who are trying to compete with the Gustos and the Ripplings and the, whoever they might be, and they're just fronting it. They're just straight up, we have a big enough war chest and we're gonna just front it. But therein lies the danger, right? Because for those companies, there's always somehow kind of a catch. We find that if they're fronting it and we get the same amount of data later on, like we've come across clients who, oh, this company is great, they fronted the money, but when we went through the numbers, we were like, wow, your credit's actually 4 times higher than what we found before. And so that's why, although the money's great, in advance, they're actually leaving a lot of money on the table too, because when it's too good to be true, sometimes maybe sometimes it is. So there's always that double check that we like to do and say, hey, even if you've already done the R&D credit before, let our software, let our kind of brain power take a second look
Just in case.
just in case. Yeah, we often find on average 3.5 to 4x more in credits than in previous years. So.
Great. Thank you for that. And I want to make sure we can get through to the I think we've got a couple more slides left, but we had a couple of questions here just on timing of things that I thought maybe quick questions just to answer. So does R&D prior to incorporation apply to a claim? So can you claim anything that's prior to incorporation? And salaries would be unlikely to apply, but what about other expenses? So if you've got expenses before the corporation, and then also the other question was if you've already filed your tax return, how do you claim those after the fact, so beforehand and after fact? With any quick thoughts there?
Yeah, so beforehand, they're called startup costs in general, right? So if you have, so as long as you're tracking it and you have the documentation, right? So receipts, put it into QuickBooks or Xero or accounting software. So those costs can definitely qualify, and then it would be filed on the initial year's tax return. So that's the first question. The second one, if you've already filed, then it comes this whole logic tree where the R&D payroll offset is on a timely filed return, including extensions. So you want to be sure you file that year over year, right, on the timely filed return. Now, if you've already paid taxes in a situation where it's not related to the payroll tax offsets, you can always go back as long as it's statutorily still open. So here in the US, it's 3 years, right, going back. And in our state of California, where we're in, it's actually 4 years. Okay. So we can actually start with that. And then we have companies, to Janice's point, where we've said, like a pharmaceutical company who's been around for 8 years, they've always been in losses, right? We can actually keep those years open because even if we had credits in even those years past the 3 years, they would have never been able to use it. They were in losses, so it would have just carried forward. So we're actually allowed to go back all the way to the beginning and carry forward 8 years worth of credits, right? If we had to, or if we wanted to, but unfortunately, those credits would not be eligible if not on a timely filed return for the payroll tax offset. That's the only thing. Yeah,
that's clear. Great. Okay, I'll pass it back to you, Janice.
Okay, great. So just in terms of process, what we do is once we get through all this data analysis, we get the quantitative and the qualitative, we actually create the tax forms to hand off to the CPA or the tax preparer. So we're very much aligned with them. We like to talk to them early on so they know what we're doing and they're prepared to file with the forms that we provide. And so that's a big piece of it. Another question we always get, and we can assist with that if people really don't understand it, because it's new for most CPAs or tax preparers that we deal with. It's not common. And just another question we have is like, after we do all this automation and we have all this cool tech, is somebody who really understands it, like Joshua, that has a lot of experience looking at it and making sure that it makes sense, just so that it's logical, right? And that is a big piece of what we do at the very end. It's a small part, but we consider it very important is to have that white glove touch to make sure the credit review makes sense, it's logical, and that it's flow through. Especially, it gets a little complex sometimes with flow through entities, with S corps and LLCs and different kinds of groups and partnerships, and there's some complexities with entities as well. So we look at that, try to make that all make sense, and have some good strategy conversations if it's relevant, if it makes sense. And then we can also help on the other side with actually loading these credits, managing that, and letting them know, okay, you know what, you're in Q4, you've all used all your credits, so you guys need to close your books in January. Let's file your taxes so you can start using these credits in Q2. So, we kind of help manage that process as well. That's what Rochelle and her team is brilliant at. So that's all a good thing. This is just one couple things here before we run out of time. We do have a dashboard. We have an onboarding place. People can go into this. The CEO has ability to give, restricted or as much access as he wants to his stakeholders to actually look at this data and go through the process. It's pretty deep. This is just one shot. Just wanted to kind of give you a big picture of what it might look like and give some summaries as well as then the data. And then you can actually, when we upload the qualified wages, it'll detail every employee and what they are qualified at, the percentages, the expenses, and you can dive into each one so that there's, people can actually see what we're doing so that there's agreement and we're all on the same page at the end of the day. So, oops, wow, there we go. What's happening here? Sorry. And that's not it. Oh, I'm so sorry. I'm silly. Okay, this is one of the examples of the overall tax credit. So we can do it by year. It gives the status. You can tell where we are with each of the years as we're processing the data. If you're doing an amendment, we can show that on how the process is going. So that's and our process. Price. We didn't talk about price yet, so we call it risk-free because actually we have two things. Once we do all of the data input, we do all the analysis, we get the quantitative part. We actually charge you a small fee when we hand off the forms to your CPA. After that's all done, you filed, we charge you a fee, $500, and that would be our agreement with your discount through your connection here with Entreflow, which is one of the things we love to do with our partners. And then we only get paid when the customer gets and utilizes the credits, and then we charge a percentage. So that's how the payment price goes and how you get started. So we do have special, pricing that we'd like to flow through to the company. We love referrals. You might want to put this into the chat box so that you can get right into our system, and so we can identify what you're doing. And we're really open to chatting and talking about and answering questions, because this is something new, and we do understand that it's a part of the educational piece, and being part of that $50 billion is not assumed. We know that there's questions that need to happen. So that's it. There we go. Any questions, you can contact Joshua, you can contact me, just help at ardius.com. There's many ways to connect with us, and you can go onto our website and also go through a process of looking at a estimated credit quantity, and just know that it's pretty, oftentimes it's conservative because we don't know all the information at that stage. And so, but it gives you a little bit of idea on how you stand and what you're working with. So there you go. So what additional questions do you have?
I've got, so there are a couple of people asking about the slide deck. So I've put a couple of links out there. We will have it on our website, on the Entreflow website, in our secret weapons section. So we'll have the recording as well as the deck. So feel free to check that out. We should have that up there later today, early tomorrow. Then we had another question from, no worries, Amber, from Sri Revenue. Started for them 4 years while they're building the platform, and in Jan and Feb, there was no revenue due to the pandemic. Are they still eligible for PPP or EIDL? And also, are you able to help them with PPP applications?
Joshua, I'll defer that to you as well.
Yeah, no, I think, so the first characteristic, 4 years of building platform in January. Yeah, that's totally fine. But the revenue is not an earmark for qualifying, right? For either one, the PPP or EIDL. We typically have partners, like we usually have financial institutions we partner with. So some banks, actually some partners that actually specialize in this. So we go hand in hand with them, just because, for example, if you qualify for the PPP, then you can defer your payroll taxes. But the moment you get the PPP forgiven, as an example, then you're no longer eligible for the deferment of your payroll taxes. And so R&D credit's like having your cake and eating it too, because now you can get it forgiven, right? Your payroll taxes forgiven, eliminated, and still get your PPP like forgiven at the same time. Same thing with the EIDL, the disaster loan. So again, we don't specialize that. We know of it and we're really good at it, but we have the right partners that can get you set up for the PPP and the EIDL at the same time, especially as it relates to conjunction with the R&D, because it's primarily relating to the same amount of data, right? Which is your payroll data and your tax return. So we have both, and And I can't emphasize enough, like even Entreflow, right? That it's so critical. We have companies that have come to us, done all the work, and they forget to file the credit, or they forget to actually put it on their return or check the right elections. And so, we're very complimentary with Entreflow, that it just makes a lot of sense to, in tandem, right, to do this, because it is free, non-dilutive money, but you still gotta check those boxes and make sure you remit on time, and know the deadlines, and not give with the right, take with the left kind of thing. So we really appreciate the partnership we have with Helena and stuff. So
Great. Thank you, Joshua. And you can see here their contact details for Joshua and both Janice at Ardius on the site here. I put the link out here for on the chat, and the Q&A for Entreflow, Entreflow's website, entreflow.com. You can reach out to us, put all of our contact details there as well. And we'll have the presentation available there shortly. We're also going to be sending a survey as well. So it's a quick 5-minute survey. Really appreciate any feedback that you have. It helps us to make sure that these webinars are super valuable and useful. And again, I can't stress enough, thank you so much for taking the time today out of your busy schedule to talk about tax, which is not something people are usually very excited to talk about. But this is an exciting aspect of tax. I think we've got just another couple of minutes left here. So if anybody has any burning questions, feel free to put them into the chat. Otherwise, I wish you all a very lovely, wonderful rest of your day. And you've got contact details here for people to reach out to. We'll send you a survey, and the recording and the slide deck will be on our website, as I mentioned. And thank you again to Janice, Joshua, and Rochelle for joining us today. Absolutely delighted to have you here, and I learned a lot, so I'm very delighted to have you here. And I really appreciate your knowledge and expertise. It's very helpful for small businesses.
Thank you very much for having us. We're excited to be connected with you all and looking forward to collaborating. It's awesome.
For sure.
Yeah. Thank you so much.
Thank you all. And again, if you have any last minute questions, I think we've got another minute left if you have anything burning, and otherwise you know how to find us.